Spirit Airlines President and CEO Ted Christie joins us now in a Closing Bell exclusive interview. Ted, welcome to the show. Talk about what you're seeing as far as demand and why it's better than expected.
Well, thanks for having me on. Good afternoon. It has been a nice recovery out of the Omicron depths. Just past the New Year holiday, we really saw a fall off in demand and booking activity as a result of that surge. But beginning with the middle part of February, it's been a quick recovery, and we're now in a position to see demand really eclipse 2019 levels and starting to see yields get close to 2019 levels and maybe a little bit higher. So a very strong spring as we head into spring break.
Coupled with that strong demand, you are seeing higher costs. Obviously, jet fuel front and center for you. How has that changed the economics just in this last surge that we've seen in oil prices?
Well, yeah, it's frustrating, obviously, in the near term. When oil moves quickly like that, it's difficult for airlines to adjust what happens with their network and that sort of thing. But the good news, when you operate an ultra low-cost business like ours, we're the most fuel-efficient business in the industry. And so as oil prices begin to climb, that actually increases our competitive advantage. And because we burn less fuel per seat. So it's not a good thing when input costs go up, but we're in a better position than most.
What does it do for pricing? So you're seeing the strong demand and rising cost. Does that mean we, the travelers, are going to be paying higher prices? And if so, when?
Well, what really drives pricing is demand. Input costs in the airline business aren't a big driver of the way prices work. What drives pricing is increased demand. And like we just talked about, there's been a lot more demand into the spring break travel period, and we're already seeing it into the summer as well, which is very encouraging. So there will be a supportive pricing as a result of all that. But you're talking to the CEO of one of the lowest fare airlines in the industry. Our job is to keep fares low for consumers and stimulate more activity, and that's what we're really excited about doing heading into the summer.
Well, you're also merging with another low-cost carrier, which is Frontier, to gain scale there. There have been complaints, though. Some Democratic lawmakers do not want to see this deal go through. AOC, Senator Warren, Senator Bernie Sanders all sending a note to the Transportation Secretary and the antitrust regulators saying it will not result in lower prices for consumers and it will not be a friendly deal. Look, it's a tough environment, Ted, for antitrust right now. The Biden administration has blamed corporations and monopolies for some of the inflation we're seeing. Are you going to struggle to get this deal done?
We're really excited about this deal and feel very good about the case we're going to present. While there has been some, we've seen the letter as well. I think what was key in there was they were focused on if the transaction were to provide some problems with pricing or competition, then they would be concerned. And what we're excited to show is that this is actually a very pro-consumer, pro-competitive deal because you've got the two lowest-cost businesses combining to drive lower fares and more growth. So we're really looking forward to giving that story, and I think at the end of the day, our deal gets done.